Well, capital market as a catalyst for economic development and sustainable growth. That's the theme of this year's annual conference of the Chartered Institute of Stockbrokers held in Lagos last week. Participants looked at ways by which the federal government could finance infrastructure through mobilization of medium and long-term funds from the capital market. Let's look at the talks around this. Ayodeji Ebo, Head Retail Investment at Chapel Hill, Durham. Thank you very much, Mr. Ebo, for joining us. Good morning.
Good morning, and thanks for having me.
Yeah, so the stockbrokers just concluded its flagship annual conference with the theme Capital Market as Catalyst for Economic Development and Sustainable Growth. Why is this theme apt at this time?
Thank you, and we thank God for a very successful conference. And if you also, coincidentally, if you look at the theme of the 2022 budget, which speaks to economic growth and sustainability. So part of what has informed this is that beyond just growing, beyond just developing our economy, we need to be able to build capacity in terms of sustainability that will not be susceptible to oil price fluctuations. And we believe that the capital market that provides long-term capital will be able to help support this. When you look at the banks, most of the fundings are, I would say, medium-term. They hardly provide very long-term capital, which a lot of businesses, for them to be able to build a sustainable business, you will require long-term capital and at a very reasonable rate.
Now, you were the co-chairman for this year's conference. What do you think is the significance of this conference to the stockbroking community?
It's very interesting. And when we look at the plenary sessions that where we're able to dive or discuss a lot of the topical issues that we believe that will be of benefit to stockbrokers, we looked at the opportunities. The first one, looking at the opportunities in the recently passed Petroleum Industry Act, where the capital market can provide support. You know, we're expecting that the NNPC Limited will be listed, and that will also provide an opportunity for funding long-term capital. We would also expect that as more businesses take advantage of the PIA, they may require capital for support to grow their business. Also, another very interesting session was around the small, medium enterprises. And we discovered that capital, which is also a major problem, but beyond capital, most of the businesses are not also prepared to access the capital. Yes, there may be concern around in terms of the requirements, but for some of the speakers that have been dealing with SMEs, some of them are taking that initiative to also try to prepare businesses to receive capital, to receive new investment, which we believe that capital market can also play a role in that. We also looked at Fintech, which we know the evolution of Fintech within the capital market, how the capital market can also provide support or collaboration in this regard. We believe that listing of some of these Fintech companies, and you look at the dynamics of a lot of the Fintech, they don't make money immediately. It's always long term. And when you see even for the NASDAQ, some of the international stock market, you see investors still buy into companies based on their projected revenue. They may still be declaring a loss. So we believe that we also need that reorientation, that investors shouldn't look at just companies that are declaring dividend alone, but you can buy with a potential profit in the future. And to just wrap it up, one very interesting topic that would also be very interesting to even investors is we looked at, there was a roundtable, stockbrokers roundtable around unclaimed dividend. How can we streamline the processes? How can we reduce the amount of unclaimed dividend, and this was really very discussed. And we believe that we're going to publish a communique surrounding the recommendations that will provide more details than some of the things I've said.
All right. Looking at some of these plenary sessions being discussed, you did mention the SMEs. What for you stood out in this plenary session?
Okay, thank you. So part of what we discovered is that there is sufficient, that we have sufficient capital, but most businesses, based on the criteria, which I won't say it's overboard, are not really positioned for that. So putting this into perspective, you have people running businesses and they don't keep records of what you sell, and even to know what your margin is. When you ask questions like, what's your profit? Most people look at the turnover and they are not prepared. Also looking at in terms of capacity, have they built enough capacity in terms of running a business? And that is why we also discovered that collaboration will also play a major role. You may have the vision, you may have the skill, but you can collaborate with those that also have the skills so that you build a strong business. And we also look at something very interesting, which was around the SMEs, which is focused on women. So we discovered that there are a lot of funds and capital that have been specifically targeted or targeting women women in business rather. So that is also very encouraging, and we believe that the capital in itself is not the only requirement that SMEs should always focus on. They should look beyond even the capital, building that capacity, building that trend, and being able to meet those requirements from the day they set up.
Now, on the issue of the PIA Act, which of course the conference x-rayed, looking at the opportunities for the capital market, what should the stakeholders in the oil and gas sector be looking out for in the capital market?
Okay, thanks. If you look at currently the listed companies, we have only, I think, our 2 upstream companies listed on the Nigerian exchange, NGX, Seplat and the Forte Oil, which is also has a bit of upstream. But I would say Seplat is like the main upstream company that is listed on the Nigerian Stock Exchange. We believe that there are a lot of more companies that can take advantage of this. A lot of them are profitable, and to create visibility, to also be able to access long-term capital, that the capital market can provide that long-term capital in form of equities. And it creates a bit of stability. You know, when you go for debt, you are obliged to keep to the interest expense element, to paying the debt holders rather. So, but if you raise capital, you're able to also be able to retain and be able to balance and compensate equity shareholders. So we believe that the PIA would help solve that. You know, part of what is in the PIA is that there will be the regulation and removal of subsidies. So that will create a level playing ground for players within that market, and that will also create a major market. The capital market can provide that funding maybe in form of debt or in form of equity to support those businesses. Once we believe that there's clarity, once the investors see that there's more clarity and there's a level playing ground in this particular sector. You look at the books of the banks, about 30% of their total lending goes into the oil and gas sector. So we believe strongly that there's still a lot of opportunities within the oil and gas sector. Yes, there's a lot of discussion around renewables, but the reality is that renewable now cannot power industrialization. If we need to industrialize our economy, we'll still use fossil form of energy to support that. And you can also look at that across the world. So we believe there's still opportunity within the oil and gas sector.
On the issue of the roundtable on the unclaimed dividend, I know that have become some kind of issue for investors. So going forward, what should investors be expecting? I mean, coming from this conversation of unclaimed dividend.
Okay, thanks. And for that particular session, it was very interesting to even have the Director General of the Securities and Exchange Commission seated, and we believe that some of the recommendation discussions have been taken, and I will just state some. Part of what was proposed within that roundtable is to even have a seamless electronic form. So once new investors come into the market and you are opening a new stock account, you don't need to mandate or fill any form to get your dividend, because the same requirements that you will need for the onboarding process is also what is needed to assess your dividend. Secondly, they spoke about standardizing the forms that is being completed across all registrars, because we discovered that the requirement vary across registrars. So we believe if this is also done for those that still have unclaimed dividend, would also help. And lastly, there are a lot of other suggestions. Lastly, around that is that for the government should also note, looking at the last Finance Act, that 2020 Finance Act, the government stated that for dividend that have been above, I think, 10 years, would be borrowed by the government. But the interest rate was also not stated. So the representative of the shareholders emphasized this, that government needs to review its position regarding this, because these funds are for shareholders and interest are paid when they come to the market to raise funds. So the interest should also be known and should be very attractive, pending when investors come to claim their dividends.
Now, you did mention that also part of the conversation centered on how fintechs can actually access funding through the capital market. What's the consensus there?
Okay, thanks. I think the major points, I think recurring point is that also came out of that is that the payment process is also critical to fintech, creating a very strong payment platform. So would really help a lot of the fintech to grow their businesses. And that would also provide a bit of confidence for potential investors. And around assessing capital in the stock market. So what what was discussed is that believe that the exchange can create or can review what we have the growth board, where companies that don't have as much requirement as the main board are listed. Most of these fintech companies can fit into that, and they will also be able to access long-term capital. But we need a lot of investor education, that people would see that potential. They will be willing to invest in those companies that are starting now with the potential of making money in the future, like we see in other climes.
All right, thank you very much, Ayodeji. We do appreciate your time and sharing those conversations you had at the conference last week with us. Thank you very much for your time.
Always my pleasure. Thanks for having me.